confirms the original fears and anticipation that Nigeria was technically and officially in recession, which means that you have 2 consecutive quarters of negative growth. However, the 3.6% contraction was much more shallow than was originally anticipated. Financial derivatives company projected a minus 4.7. Analyst consensus across the Bloomberg consensus was minus 5.6. So coming out at this level was much better than was originally feared. However, we must bear in mind a couple of things. One, that Q3 was when we reopened the economy in August. We opened the airports. We opened the land, interstate land borders. We allowed for partial activity. And so that happened. But it was in Q4 from October 21st that we had the NSAS impact. So the NSAS impact is going to be felt in the Q4 numbers. However, we must also bear in mind that Nigeria also entered the region of what we call hyperinflation, where inflation had gone all the way from 12% to 14.3% and is expected to cross to 15% by next month. So when you have hyperinflation and negative growth, you come up with what we call the concept of stagflation. Stagflation is a very unique situation. If you look at almost all other countries, you are going to be told by many people that, oh yes, the growth is better than some other countries. But those countries do not have inflation in the region of 14%. So Nigeria has stagflation and has to deal with it in a very unique and actually innovative manner. So we need to be innovative. We have to be creative to deal with the situation of stagflation. We have the Monetary Policy Committee meeting during the week, next week. And so, one, they are going to be looking at the monetary policy to see that it is consistent with the fiscal stimulus that will take the economy out of recession. But the biggest fear is, how do you do this when there's hyperinflation, when the currency pressures exist, and when investors are at best skeptical about putting their money into the economy? The economic sustainability plan was actually launched sometime in the end of second quarter. And you are beginning to see some of the impact of that on the economy. That is why the depth of this recession wasn't as this recession wasn't as deep as was originally feared in Q3. But you will see the effect of that in Q4. Now, what we need to do is to reinforce the economic sustainability plan. We need to incentivize investors to bring money in, both international and domestic investors. And we have to understand that this is going to be a long, slow, and painful recovery. There's no silver bullet. So you are not going to see positive growth until sometime in 2021. And that is because our oil production and oil price, luckily the oil price was much stronger than was originally feared. And originally we thought oil price would be about $30, $32, $33, but it came in average in the third quarter was $42. So our oil price was at least 30% above original projections. And so we need to pass the PIGB very quickly. We need to do something about the artificially low interest rates in the economy, which is actually a disincentive to investors and a disincentive to savings. So while saying that, some of the programs which have been embarked upon, Anchor Borrowers Program, and these things have to be continued. But we actually need to consider very strongly reopening our borders, which I think should be done very soon. We should also consider making sure that we take advantage of the West African market, the ECOWAS market, to actually incentivize growth and investment in this economy. But having said that, the truth is that there's no silver bullet. There's no quick and sharp recovery. It's going to be a U curve, which means the economy tanks. It stays for an elongated period at the bottom and then begins to pick up very strongly. That is what I think that's what the future holds, at least in the next Q4, Q1. I think that by Q1 or Q2, you will begin to see signs that the recovery is beginning to pick up. And then by Q3, we should be in positive growth no matter what happens.